I'm back. Hey guys, it's Keith Allen, and today it is Bitcoin's post-halving shakeout continuing. What you need to know about this Bitcoin price action. Yes. Oh my gosh. Hang on a second. I got a lot going on here. Geez. Today pretty much a debacle for me. I appreciate your guys' patience as we get into the swing of things here. If you're tuning in for the second time today, hey, thanks. I appreciate it. I actually did an analysis earlier today. Started late, got about 15 minutes into it before I realized that my screen share wasn't working, and I redid the analysis, and it ended up being pretty long, and I was going to edit it, and just a whole headache with doing that. So I figured clean was to give you a fresh analysis, and we have the benefit of a couple more hours of price action here to go through with it too. So you got that going for you. You're getting a bonus today. It's no longer morning, so we're going to call this one the Bit Break. And you know what? I may even just like rebrand this whole thing into Bit Break. I was doing this morning analysis every day, and it's getting harder and harder to do in the mornings. I may just rebrand everything as Bit Break, and I can do them anytime and as many times a day as we like. Before we start, just a quick bit of housekeeping. I'm not a financial advisor. I don't provide financial advice of any way, shape, or form. Nothing I say or share should be considered trading or investment advice. Trading is risky. Do your own research and never risk more than you can afford to lose. With that, let's go ahead, share the screen. Say it with me. Share the screen, Keith, and we will climb right into this price action here today, which, as we can see, price now up against 65K, looking for a potential retest here. We've had a bit of a battle here, and of course, the halving right here. I'm looking at the daily chart. I want to take this to the weekly here for a second and show you. There's been some concern about, how come price we had the halving, how come price hasn't just shot up straight from there? And well, it's not supposed to. Is the TLDR, the too long didn't read version is it's not supposed to. Yes, the long-term outlook is quite bullish for Bitcoin. However, history shows us that around halvings, we do have some periods of consolidation and correction before things really take off. And to illustrate that, I want to take you back to the very first halving, way, way back in 2012. And here we can see that right after the halving, there was a period of consolidation with a little bit of a little bit of a pullback. This one, it wasn't a lot, but still, nonetheless, we were trading in about a 10% range here, 8 to 10% range here for several weeks after the halving. Okay, there was an initial pump, and then things consolidated here in about an 8 or 10% range here for 1, 2, 3, 4, 5, 6 weeks, 7 weeks really before things really took off. Now this was a massive move. This was like 2,000%. I'm not expecting a move like this at this point, but 1,700%. Pardon me. Nonetheless, this was just an example of how price kind of behaves after halvings. At least this was the first example. Now let's move to the second halving back in 2016. And this looks kind of similar, doesn't it? Right? We had an initial pump as the market at that point felt like, hey, halving is coming up. That's going to decrease the daily supply. So they bought. There's a big rally, 4 consecutive green candles up, and then a nice correction here. Things pulled back further right through the halving, right? A little initial blip, and then things broke down. This was a deeper correction, of course. If we took it right to this peak, I mean, depends on where you want to measure from. Let's go from that current, or what was at the time the all-time high. That was a 40% move. If we took it down to where things were right around the halving, then that's a 32% move. Still, either way, big correction right after the halving before things began to progress in a bullish manner. Now we move to the third halving, which was back in 2020. And this was coming off of the COVID crash and a quick recovery. This was really a period of uncertainty for a lot of us. And every one of us, I'm sure, who was trading at this time wishes that we had held everything that we bought back at this time. But again, we expected things to break down further because the economy was bad and because inflation was bad and because there was geopolitical tension. Look, very little of that mattered in terms of what the market did, and things obviously flourished from there. But right at the halving, look at this. We were trading in this range for weeks, and this was okay. So this was a week before the halving, pulled back. That was 13, 14%, about 15%, and price continued to consolidate here for many, many weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks until things started to take off. And even then, a correction occurred. We had another correction a little while later. How far did this one go down? This one was 20%. Okay. So even in a bull run, you can have these 20, 30, 40% corrections. They happen. All right. Look, here's a prime example. This was the new all-time high at the time. This is where distribution really began. This was a serious pullback. I mean, major. Let's see what that one was. This was 55%, okay, 56%. That was a huge downside move, and then we had this distribution rally that took us to a new all-time high, and this all-time high held for years. We went into this bear market, of course, after that, and started climbing out. Let's see, what is this? This is the FTX crash here took us to our local bottom, or at least what is now our bottom at 15.5. Things started to rally out. We had some ups and downs along the way. This was largely considered by a lot of us, myself included, as bear market rallies until we had a validation that we were getting a breakout. Okay. And of course, as we moved into the end of the year, we did start to see some major moves happening in mid-October. Things really started to pump, and these pumps happened, and they were uncontested. I mean, unbelievable runs of consecutive green candles, no retest of the prior support areas, and this was a concern, right? I personally expected to see retests come back down here into this 30K range. Didn't happen. In hindsight, 25 was where it was at. We had this bottom here, a retest here, and that was it. In hindsight, I wish I held more. I have some, but I wish I had held more from this level, because this was really the sweet spot in terms of breakout. Because look, we broke this 200 week moving average here, and it was off to the races. Big pump up to the 40 to 45K range. Uncontested, by the way. It never came back to retest this after it broke out. But we spent a long time here. And so this is still a target that is not off of my radar. This is still on my radar, as is this area of consolidation here at the 50 to 52K range. Now, that said, we don't currently have any sentiment to move to these levels. All the action is right up here. And this is a very large range, in my opinion. 59K up to our new all-time high at 73,800 or so, right? And so here's the halving, right? And look what's happening. Again, we are chopping, consolidating in this range, maybe a little bit of downward momentum. But what we have here, the most important levels that I'm watching anyhow, are this lowest low, 59K and change. It was retested. Hard to see here on this candle because it's overlapped by the blue halving line, but this was retested. So this was at 59,300 and change on this exchange. It was a little lower on Coinbase, but nonetheless, it was just over 59K. And then we had another retest here a week or so ago at 59,600 and change. And we've held at this point. So if this continues to hold, then we can validate an RS flip here at 59K. What we have not been able to do is validate an RS flip here at this prior all-time high, the 2021 top at 69K. Look at all of these times that we approached this, were rejected, came back, rejected, rejection. Broke out or attempted to break out, but these wicks below were a sign of weakness to me. And it eventually led to another breakdown, right? Rejection, breakdown, 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 come back, and we start printing our first candle above. But the candle after that was a failure, right? It wicked down below, and another wick, and another wick. And so if these wicks weren't to you a sign of weakness as they were to me, the other clue that you could have keyed in on was the declining volume here. This is always a sign of weakness. Strength is increasing volume. Weakness is decreasing volume. And decreasing volume, along with wicks below that level of prior resistance, to me were indications that we would see a further breakdown, which we, of course, later have seen. And now our most recent breakdown occurred more than a week ago. We had maybe a little help of a catalyst from both tax reporting on April 15th. And so maybe there was maybe there was a little bit of tax loss harvesting there around that event. And of course, a day or so after that, we had or right around that time, I should say, we had some serious geopolitical activity happening in the Middle East that served as a catalyst to send price down even further. And now we're running into resistance at the 21-day moving average and the 50-day moving average, both of which have been very, very difficult for us to crack. So again, the areas I'm most focused on, this lower low, it has to be defended. If it's not, I'm looking down here. I'm looking to this level, 50 to 52K. And if that doesn't hold, I'm looking to this level, the sweet spot being around 44, 45K. And if we looked at it in terms of what that would translate to in terms of a correction, I can tell you very clearly that this move down to 59K would be a 20% correction, that this move down to the 50 to 52K range would be a 30% correction, and the move down to the 44, 45K range would be a 40% correction. So those are all viable targets, in my opinion. What is not showing up at this point is liquidity in those ranges. Okay, so we're still holding at the moment in this area above 60K, but that could change in an instant, right? What we really need to see here is more bid liquidity. What bulls really need to see, I should say, is more bid liquidity coming in to give us a springboard, build a stronger foundation. Quick refresh of the screen here. Give us a stronger foundation to build from. You can see resistance dropping down upon us here at 65.5. And if I zoom out here, and I've shown you guys this before, if anybody's new to the stream, I hope this clues you into how liquidity, the dynamic placement and movement of liquidity really impacts the price action. This is really what it's all about. We're looking at candle charts here, and these targets are viable targets. They're database targets. There's no speculation there, right? In terms of technical analysis, there's very sound reasons why I picked those targets. But whether we go there or not, whether price actually moves there or not, is somewhat speculative. And that's why I say the order book is a great place to get more clues, because liquidity equals sentiment. And here we can see our highest concentrations of liquidity here at the 60K range with a decent ladder below it. But as you'll notice here, that ladder has faded a bit since it started, since it first appeared. Now, that's not all bad either, because what has faded is some of these blocks have actually moved up higher above 60K. And so that's inherently bullish. However, the fact that it's being removed at all and not replenishing, if it moves up, that's great. If it gets taken, that's also okay, but you want to see it replenish, and you want to see it get brighter than what's up above, right? So we have a solid ladder of resistance above our 69K level, right? And it gets even stronger above 70K. And we have a decent bid ladder below, but really not as much as we'd like to see, or in my opinion, what we need to see to get a real boost up, to create a good foundation for this move up. What I'm looking for is something like this, 100 million with another 93 million stacked below it, and another 58 below that, and another 30 below that. So this is 250 million right here. And you can see if this works in both directions. I got 134 million stacked above, and it sends price down. If we go back in history, here's 127 million, and price moves up. Here's 100 million, and price moves up. You put another 84 above it with another 68 above that, right? The brighter side wins the battle. The brightness here, here's the color scaling, right? And it's different on every chart. It's based on the liquidity that's in that order book, in that time frame for that asset, and the time frame that you're looking at. And in this version, in the 3-year history, that white color is the hottest part of the chart, and that's 134 million bucks. We're not seeing any concentrations like that yet. Now, it can show up unannounced, moment's notice, just like that. We've got $100 million block there, and we'll start to see things change. And whether that block appears down here in the support area or whether it appears in the resistance area remains to be seen. But we're always watching for moves like that in the order book. If we bring it in to narrower time frames on the monthly, you can see that we do see a nice ladder consolidating around the 60K range, 58 to 61 now. And to really get enough to push through all of this, I want to see more stacking above 60K, even if it came right here below it. But above it is better, obviously. We just need to see more coming into this range. And until that happens, I don't have any confidence that we're going to be able to clear this with any real conviction. Now, that said, we do see some of this coming out of the range here, and some of it's dropping down, right? So once that clears out, even if it drops into the local range and it gets filled down here, once it disappears, if it doesn't replenish, anything that thins out this range makes it easier to penetrate. So this could take days, weeks, months to happen, but one way or another, we're going to see some movement. At the moment, you see price consolidating into this range. And this, to me, looks like this entity, whoever's double stacked these two 20 and $17 million bids, asks rather, is trying to push price down here to get filled lower. Now, who wants to get filled lower? Pretty much everybody, especially and most especially the ETF, institutional ETF traders and investors. Remember, Hong Kong just announced that on April 30th, they've already approved for trading Bitcoin spot and ETH spot ETFs starting April 30th from Hong Kong. So that will increase the demand once again and should have a net effect of pushing price up. But we're not seeing, I don't expect to see them just buying blindly, kind of like we did when the US ETFs were launched. Do you remember? We came out of the gates hot, 10 years of pent up demand. And, of course, we did have a little pullback from all the grayscale offloading initially. After that, we really saw things pumping. Now, what's notable here is that yesterday is the first day in 71 consecutive days that Blackrock did not buy. And I read some articles that were doom and gloom. Oh, now that Blackrock's not buying, we're doomed. Price is going to retreat. Listen, this is just normal trading, right? Should they keep buying just to set records? No, nobody cares. Nobody gives a shit about the record. Okay. What is important is that they're making smart decisions, right? And so they anticipate, obviously, yesterday they anticipated that price would pull back a little bit more. So they chose not to buy, and that's okay. So I don't buy into the doom and gloom articles that say that, the Bitcoin ETFs are leveling off and prices and we're doomed. Listen, they're now trading the market rather than controlling the market and the insane amount of demand that they had flooding the market, pushing price up. They're now letting things settle down, and they realize that they were really their own worst enemy by buying as aggressively as they did. They pushed price up, and price did not retest any of those prior levels. Just like I showed you here a minute ago, this is all ETF demand, pushing price up to these crazy levels with that. Well, they're not crazy levels, but just all the consecutive green candles with huge green candles, I might add, without ever going back to retest those levels. That was driven by the ETF demand. So we have a monthly close coming up in less than a week, and that correlates with the day that the Hong Kong ETS will hit the market. So I expect more volatility coming. I expect that price will continue to range here until something breaks. Right. So is the downside going to break if we retest this 59K level and lose it? I'm looking here. And if we lose that, I'm looking here. This is, for months I've been calling for a retest to this level, and I would be very, very happy to see it. I'm saving a little bit of powder for that, but in the meantime, I've deployed most of my position. I'm not 100% there yet, but I have saved a little bit so that if this opportunity presents itself, I'm going to go after it. And quite frankly, this is my invalidation. If we lose this level here, I will sell some of what I bought in this range, and and recycle those funds into wherever we land and establish support. So at the moment, we have support here at 59K, and we have strong resistance. We have strong technical resistance here at the key moving averages, the 21 and the 50 day moving averages. Strong resistance here at 69K, which is the prior all-time high, and of course this whole range above 69 to above the current all-time high to 75K, 76K is very, very stacked. There's billions in shorts up there that could eventually get squeezed, but maybe those guys are smart, and as they see price come back down here, maybe they close those shorts and avoid that liquidation. So that's pretty much my perspective on it here, right, guys? So I hope that helps you out. I hope that gives you an idea and at least some comfort that these periods of consolidation and these little pullbacks that we're having here are okay. It's not something you should panic over. It's something that you should be aware of. It's something that you should, well, I'm not going to say you should. I'm going to tell you that I personally am conserving some resources, conserving some capital for those potential opportunities. And I don't trade leverage, but for those that do, you really want to be careful, because those corrections, it's not a matter of if they're going to happen, it's a matter of when they happen. So with that, we're going to wrap this. Take two, I think, was a better version of the analysis. Real quick, we'll give you one last look at fire charts to see if we can notice anything on the intraday. Here's the weekly, here's the daily, and again, here's the situation, right? So strong resistance right here, 12 million overhead at 65.5, very little below us to hold price up here, right? And the order flow is tapering off just a little bit, waiting to see how things develop here. I have this feeling that when price kind of hangs in a range like this and consolidates, just chops sideways, it's like they're waiting for the market, somebody to get impatient and either place a big market order up or down, or to place a big block of liquidity up or down to herd price in the other direction. And so far, this is where that block exists, which to me means, or is at least an indication, that somebody is trying to push price down to the 61 or 60K level to get filled down here and potentially close some shorts, right? So I'm going to wrap it at that, guys. Hope that gives you some insight and some perspective on what to expect here as we move through this period. Really a historic time to have this halving happen, and to now have Hong Kong launching ETFs here in literally less than a week, which correlates with the monthly close. We're going to have some volatility around this monthly close. I promise you that. And well, we'll see what tomorrow brings. If I see anything new happening here, like any major developments, I'll certainly do my best to clue you in on that. In the meantime, if you like the content, please do me a favor, smash all the likes, share a comment. I love the comments. I read each and every one of them, and I engage with each and every one of them, and I appreciate them. And I appreciate you guys for following along and showing me the support and love you've been showing me. So with that, we're going to wrap it, and we will talk to you real soon. Make it a great evening, great day, whatever time of day it is, wherever you're at. Enjoy the rest of it.